entry trigger. So we'll do entry trigger today. And for the entry trigger is actually getting the exact point and placing a trade at the right time is very important. You can get it, you can draw your structures. You draw a structure and the last candle reaches that point. But if the last candle reaches a point, I told you that two things you can trade. Either you trade reversal or you trade break. Just those two. So if the last candle reaches a structure, how do you know that structure is supposed to, or the candle, or there's supposed to be reversal or break? So if this is a structure, how do you know it's supposed to come down, or when it goes up, it has to go up and continue going up? All those things are centered around entry trigger. And with the entry trigger, we'll actually do what we call reversal candles. So on our chart, we have two kinds of candles. We have what we call neutral candles and we have reversal candle, that is candlestick pattern. So we concentrate on those candlestick pattern and actually know the exact, or when the last candle reaches a zone or a structure, then we know whether there will be reversal or there will be break. Now, let's get to the slide. I think this is the slide. So this is a slide. Now, you look, actually, this is what we call candlestick pattern. So we have a buy candlestick and we have a sell candlestick. I've told you guys candlestick mathematics, so candlestick pattern will not be so complicated. But you should understand the dynamics behind these things. Don't cram. I always emphasize on that. Do not cram this candlestick. Understand what or how the candlestick is being formed. You need to understand this. When you have a candle, you have a candle like this. Then on that candle, you have a long wick. You can have a wick and the body. The ratio of the body of that candle to the wick of that candle will give you whether it's a reversal candle or it is not. So you should understand all those things. Please, can you meet yourself? If you meet yourself, it will be good there. So we'll start with the first candles. We have what we call neutral candlesticks that have nothing to play on your chart. They have little or nothing to play on your chart. They have what we call bullish reversal candles, and we have bearish reversal candles. Now, for the bullish reversal candle, there are actually candles that indicate an opportunity or gives an opportunity for you to buy. For bearish reversal candle, it gives an opportunity to sell. So for bullish reversal candle, the candle actually may have a downward move, and when you see that candle on a structure, then it gives you an opportunity to buy. And vice versa goes for a bearish reversal candle. Now, be careful when you are trading reversal candles. Very, very careful. When you are trading reversal candles, you should know you don't see a reversal candle at any point, then you just go in and you buy or you sell. That is why I explain. And that is why the journey is in 3 steps. You have the market structure, you have the area of value, and you have the trigger. If you cannot draw an area of value, there is a reversal candle, then you may actually have problems with that. Yeah. So when you spot all those things, you may actually have problem with that. So reversal candles should be gotten only on structure. So place a trade based when the reversal candle is on structure. So what you do is, the first thing, step 1, you go on your chart, identify the kind of market. Is it an uptrend, a downtrend, a choppy market? If yes, and what is the kind of candle what kind of candle do you see? Candles that volume is reducing or candles that volume is increasing? That is actually market structure. You move now to the next. You draw your structure. You draw your structure, area of value. So you go, you say, okay, I spotted the resistance here. You draw the support. You draw trend line. You draw. You do your multiple time frame analysis. I get a direction. If it is a sell opportunity, fine. You get a claim trigger and you say. So that is how it goes. Now, take for example, if the multiple time frame analysis shows you this day actually has to buy up, then you go now, you get a sell trigger. So you see any of this reversal candle, a bearish reversal candle, for example, maybe at this point, will you sell or will you buy? That is what we call fake signals. And in most cases, I always tell you 1 hour time frame is very dangerous. I don't look at it because you have so many of these false signals. And false signals is actually this reversal candle. You see a clear move. You can have a structure. We have a structure. You see a clear bearish reversal candle here. And after that, you see the market buying. That is actually what we call noise. If you move to lower time frame, there will be so many of those noise. So you need to be very, very careful. Now, we'll start with the first candle, the first reversal candle. And for the first reversal candle, we'll do a doji. Remember, for this reversal candle, there are two kinds too. You have what we call a strong reversal candle, and you have what we call a weak reversal candle. A strong reversal candle are candles that actually emphasize on. So there are over 50 reversal candles. I know some of them, I don't even know me their names. Some of them, I don't even trade me them. But most of them, I can actually spot them on my chart. The reason is simple. When you get a reversal candle, those 50 reversal candles, if you see maybe one reversal candle, how many of those cases will actually go towards a direction? That's what we call proof equal profit. You need to prove your setup before you can make profit. Proving your setup does not mean when I teach you and I teach you where you actually make profit. That is not the case. My trading style may not be the same as your trading style. We have different mindset, we have different things, we have different way we think. So I'm teaching you, but it doesn't mean you should follow me exactly, because if you follow me exactly, you may not make profit. So you have to go back and you prove your setup. How do you prove your setup? You go and you back test. So if you spot a reversal candle and you just go back on your chart, how many of these reversal candles did I see? How many of the candles actually went towards that direction? It is important, and that is actually proving your setup. So if you see maybe a reversal candle, take for example, we'll start with the first one, a doji. If you see a reversal candle, which is a doji, you just go back on your chart. That is how you prove. So that's why I said you should be on your chart. It's very important. If you see a doji, you say, okay, this is a doji. This is a doji, and this doji indicates a sell. This move actually went down. That is one case. If you go back again, this is a doji, indicates a sell. Then took the second case. So in 10 situations, if you go backward, maybe you go backward towards this direction, you go backward and you check, that is actually proving your setup. How many of these reversal candles did you see, and how many of them went towards the direction? That is how you spot a weak reversal candle and a strong reversal candle. By doing reversal candles, when I'm teaching reversal candles, I always tell you the kind of candles I consider as weak reversal candle and the kind of candle I consider as strong reversal candle. Please do not trade reversal candles in isolation. You must follow these steps. They 3 different steps. If you trade reversal candle in isolation, trust me, you will lose money. If you trade market structure and entry trigger in isolation, you will lose money. So you must combine all of these things. All. So that is it. Now, let's start with the first reversal candle. We'll start with the doji. Doji. D-O-J-I. And a doji is actually a reversal candle. So with the doji, there are 4 different kinds of doji, but the most important ones, we have what we call the gravestone doji and the dragonfly doji. So remember the first thing, a candlestick has a body and a wick. I would like you to understand the dynamics behind this. The candlestick has a body and a wick. So if you have this is a candlestick, this is another one. The size of the body to the size of the wick, that is the first condition. The direction of the body and the direction of the wick, that is the next condition. So all this candle actually, this is a reversal candle. Then this one, this is another reversal candle. So all these reversal candles is dependent on the size of the body to the wick and the length of the to the body is very important. Now, a doji is actually like a cross. It has that 4 kinds, but I'll emphasize on this. This is actually a doji, and this doji is what we call a dragonfly doji. So this is a dragonfly doji. Please take note of this. This is a dragonfly doji. Now, this dragonfly doji, what does it signify on your chart? It is a bullish reversal candle, meaning the move was actually selling, and when you spot this dragonfly doji on a structure, then you know reversal has to occur. So this is actually a trigger. If you spot this doji on a 4 hours time frame, then you know reversal will occur. So if you go on the 4 hours time frame now, you draw your structure, say, okay, this is a support. We draw a support here. Then you see, you spot a resistor, you draw it, and you see this move is actually going down. Maybe it is a ranging market. Then at this point, you spot that doji. It can be just like this, or it can have a very small body up. But the ratio of the wick down should be 3 times higher, longer than the body. So if you spot this move, what does it mean? This move actually has to go up. That is the trigger. So what you do is you wait for this candle. If the last candle reaches this structure, reaches a support or a resistance, in this case, it should be a support, but I call it structure because it can still be a resistance. Then no support can become a resistance and vice versa. So if the last candle reaches this structure, then you wait for the last candle to be formed on this structure. If the last candle is formed and it appears to be a gravestone doji, fine, that is when you enter. So if this is a 4-hour chart and this is maybe 7 and this candle is still forming, then wait till 10 because this candle will close at 10. So to get a trigger, you wait for that candle to close. It is very, very important. Wait for that candle to close. Do not get in where the candle is still forming. So when the candle closes like this, then fine, you get in. And in getting in, I don't always get in immediately. This is what I do. Normally, we know the candle has a body and a wick. You have a body and a wick. So this candle will actually close like this. And in most cases, the next candle will set down a little. When it sets down a little, I get in very far down here and you see it going up. So it will set down and forms a wick. It forms a wick here before you see actually buying and going up. So I wait, it goes down a little. When it goes down a little, then I get in now and it buys up. That is how we trade this move. Please, I repeat, do not get in when the candle has not closed. There are times I have a candle, the candle will actually show this gravestone doji, and within 2 minutes, you see it goes down back, and at the end, you see a long candle down. So it maybe says down to this point. So if you are following those candles, the candles will keep changing until the candle closes. So the closure of the candle will determine or give you the clear direction. That is a gravestone doji. Now, let's get on our chart and we see. If you look at this move here, this is actually a gravestone doji. If you look at this one, let me see. That is one good example of a gravestone doji. It's actually this one. Then this is another one now. Now, let me expand the chart and we see. Hello?
Yes, sir. Did you say a dragonfly doji or a gravestone doji?
Okay, sorry, it's a dragonfly doji. This is actually a dragonfly doji. It's not a gravestone. Sorry about that.
Thank you, sir.
So this is a dragonfly doji. I can see how it appears. This is a key. You need to filter out these things. This is a dragonfly doji. Look at the body. The body is very far up and the wick. If you calculate this wick, and there are so many ways you can calculate this, is common sense. So to get the ratio of this body to the wick, you can calculate the number of pips on this body and calculate the number of pips on this wick. Then you see the ratio. But this one is about 3 times longer than the body. A perfect move. This one is even more than 3. Look at this move. And after that, what do you see? A move up. So this thing must appear on a structure. Don't just go and trade these things in isolation. Because if you trade them in isolation, you lose money. Now, this is a dragonfly doji, and this is another dragonfly doji. But please, I'll recommend. This is how me I trade. When I see this dragonfly doji with a red candle, with a red as a sell candle, it is risky. I always prefer dragonfly doji as a buy candle. That is how we filter it, based on proving actually that is the best move that can have. Now, this kind of move, this kind of candles, it may be a kind of candle we call them kangaroo tail. They are powerful candles. A very long candle down, and it actually goes up. You look at this move, it went up, and this one it went up, and this one went up not because of this candle, but because of this one, this previous candle. So that is actually a dragonfly doji. So you should draw your structures, take your time, you draw your structures, then you can get your area of value before you can start thinking of getting a trigger. It's very important. If you look at this point, was there a structure? Yes, there was a structure. Look at this thing. This thing will never occur anyhow. So if you see the kind those reversal candles on a point without a structure, then it's a call for concern. You look at this thing, this is actually a structure. So this thing did not just go anyhow. This is a structure. This is the retest, a break, retest, it comes down. Then look at this thing too. This is a structure. So it came back down at this point. I see this kind of rejection, this kind of move. Then it is perfect. See it really, really perfect. If you get in at this point, you make good profit there. After this trigger, and after this trigger, look at what happened. After this trigger, you look at this candle here. This candle actually sold down. So if I'm the one, I'll maybe get in at this point very far down here, because I said you need to wait when it sells down a little before you buy up. And if you buy up, look at this thing. This is go even, and we don't use this thing to calculate. But only this go from this point up to this point, I think this thing is more than 200 pips or even 300. It's more than 300 pips. So that is actually how you trade this thing. That is the trigger you have gotten. So now, the last candle, when the last candle reaches a structure, you don't just need to buy or you sell, but look at the behavior of that candle when the candle closes. So if you are working on the 4 hours time frame, it means after 4 hours, you need to check your chart. You do your analysis, do the analysis on the pairs you want. Then after 4 hours, you check your chart. I see the kind of candle, you see how the candle ends. If the candle ends has this kind of candle, fine, you get in. So that is for dragonfly doji. Now, the gravestone doji is directly the opposite of a dragonfly doji. And it is actually like this. You can have something like this. We have something like this. You have a very small body. You have a small body and you have a small wick down. But take note, please, the body should be small, really, really small, because there's another reversal candidate. If you don't get this body, or if you see any body, if you see the body and it's somehow big, it may give you another reversal candle. That is a shooting star. So a dragonfly doji can actually be like a cross or a very, very small body down. Very small. They can have a small wick too down. So that is a dragonfly doji. And remember, I said a gravestone doji indicates a buy opportunity. Actually, the market slowed down and you have a buy opportunity. This is for dragonfly doji. Then a gravestone indicates a sell opportunity. So the market buys or bought up to this point, and we see that doji on a structure, then you sell and it goes down. So that is actually how you spot a gravestone doji. That is how you trade a gravestone doji. Now, if you get on our chart,
Sir?
hello.
Yes, sir. Please come again. You said a gravestone doji indicates is it a buy or a sell opportunity, and a dragonfly doji is it a buy or sell opportunity? I didn't get it clearly.
A dragonfly doji indicates a buy opportunity, while a gravestone doji indicates a sell opportunity. Meaning, if you see this move, maybe this move, it goes up to a certain point, and at this point you spot a gravestone doji. After drawing your structure, you draw your structure and you see the last candle ends there as a doji, a gravestone doji, then it indicates that this is a move. That is a trigger for you to sell. The same thing goes for buy for a dragonfly doji. When it is actually selling, you spot it on a structure, then it is a trigger for you to buy. So now let's get on our chart. Let's get on our chart and we see whether I can spot some of those dojis. Okay, this is a good example, a very, very good example. Now you look at this doji. Look at this doji. This is actually a gravestone doji. A perfect move. After that, you see what happened. They move down. And look at this doji. Was it on the structure? Yes. It was on a perfect structure. And after that, you see they move down. Now, when you are making this thing, please, I said you should fit out this doji. So you should decide on which color you want to use. Most often, if I see this color, I hardly get in. As a gravestone doji, I hardly get in. And if I get in, I have to leave the market very, very fast. Because the first thing is getting an entry, then the next is getting an exit. So you must know how to exit the market. Else you place a trade and make good profit, and at the end you lost that trade. So this is it. And when you spot this kind of move, this is what we call a big reversal candle. It is a doji, but with an opposite color, because I prefer doji on this kind of move. After that, then it goes down. So I prefer a doji, a set doji that ends as a set candle. So that is actually how we spot it. Now, please, this is another trick. I've taught people, and they're making that trading just that kind of move. If you trade that kind of move, trust me, you will make very, very good profit. Now, if you are on your multiple time frame analysis, or you're on your chart, I switch to maybe to 1 day chart. Let me just switch to 1 day chart. I see. I'm recording this video, so if 45 minutes is gone, then I think we'll continue the next class. The next day, maybe tomorrow. Now, if you spot a reversal candle on the 1 day chart, you just need to smile. So this is a reversal candle. Just look at this thing. This is a reversal candle. When you spot this reversal candle, the next day, what do you see? Long 2 buy candles, 2 sell candles, very long sell candles. So if you spot any of these dojis, you draw a structure, and on the 1 day time frame or on the 1 week time frame, you see, say this is a structure, and on the 1 week time frame, this thing actually goes down, and you see a doji on the 1 week time frame. The next week, the move will be down, will go down, and it may be spontaneous. The same thing goes for the 1 day. On the 1 day, if you spot that move, the next day, you just need to go to a switch to a 4 hours time frame, and you see when that doji appears on the 1 day chart, it gives a confirmation on that 1 day. So it gives a trigger on that 1 day. Then the next day, you go to a 4 hours chart, and you spot another doji after joining those small zones. You spot another doji, or you spot another reversal candle. Let me not say doji. This is not only doji. You spot another reversal candle. I will spot that reversal candle, get in. And we get in, the move will always be spontaneous. That is how you trade. When you look at all this move, it did not occur anyhow. If you look at this move, this is actually a reversal candle. After the reversal candle, look at the move, very spontaneous. So that is actually how it happens. Look at this move. This is a reversal candle. These 2 candles actually form a reversal candle. After that, the next move, and this is a 1 day chart, where you spot this 1 candle that the candle will buy. For the whole of that day, you make very, very good profit. Really good profit. So that is the importance of this trigger. You don't trade without a trigger, else you'll be trading anything. If you're trading anything, then you should be ready to lose money too. So that is it for doji, the gravestone, and the dragonfly doji. Now, the last doji we'll look at is actually a long-legged doji. So you can have a doji like this, or you can have a doji that appears like a cross. Now, if you have any of these dojis, it tells you of confusion in the market, a kind of equilibrium between the buyers and the sellers. So if you spot a doji, it indicates equilibrium in the market. So if you get in and you are trading, then you should be expecting a kind of funny move within that time, a kind of ranging market or a kind of choppy market. This is a good example. If you look at these 2 candles, these candles here, these are actually dojis. You have 1, 2, 3. These are confusion dojis, the long-legged dojis. And these long-legged dojis, what does it tell you? It tells you of equilibrium. It tells you of confusion in the market. It tells you of a choppy market or a ranging market. So when you spot this kind of move, they need to sit back and actually think, especially on the 1 day time frame. So this is the 1 day time frame. If you spot this move, I move to the 4 hours time frame, you will see a kind of range here, or we see a kind of choppy market here. So this candles actually tells you of confusion, equilibrium in the market. So you need to know how to trade this move and know how to spot this kind of candles. So that's it for the reversal candle. You have the dojis, gravestone doji, long-legged doji, and the dragonfly doji. You should be able to spot the dojis on your chart. If you are not able, then when you do it, this is how I work. If you spot a doji and you are doubting, yeah, just screenshot and send to me. I'll confirm before I actually know, because it's difficult to spot those kind of dojis on your chart. Okay, there's a hand up.
Yes, sir, please. The last doji, I really did not get the explanation of the last doji.
Okay. I said the last doji is what we call a long-legged doji. So you can have a doji like this and have another doji like this. So this dojis actually is like a cross. You can have a cross or a very small body. Then you have a wick up and wick down, and the ratio of the wick up and the wick down, most often it is the same. Now I said where spot these dojis, this is actually what we call confusion dojis. So if we spot a doji, indicates confusion in the market, and that confusion is determined by, or it is actually equilibrium between the buyers and the sellers. So there's a kind of equilibrium. Some buyers are actually getting profit. If it is actually a buy move, the buyers are actually getting profit. That is why you see a kind of move here. So it goes up. After that, you see a kind of move. Maybe on the 4 hours. If you go on the one day, then you see a kind of doji. You see some maybe dojis. So this kind of equilibrium will be formed by, or will signify the dojis on the higher time frame. So if you spot this doji, they need to be careful when you are trading. Meaning, if you look at this point, this is a kind of equilibrium. So you have, this is a gravestone doji. You have about 2 of them. This one is a gravestone doji. This one is another gravestone. This one is a long-legged doji. Dojis. What does it actually mean? It means there's a kind of confusion in the market. And in essence, how do you trade it? When you go on maybe the 4 hours time frame, because remember this is a 1 day time frame, and I switch to the 1 day so that you understand what multiple time frame analysis can do. Some people, they'll just get in here and they say, okay, I'm selling the market at this point, I might take profit very, this is far down here. We see they lost that trade. But if you spot this doji and you move to maybe the 4 hours time frame, you see it's from a kind of range. What does it actually mean? How do you need to trade it? If this is from a kind of range, meaning if you get in, you need to get out very, very fast, because the market may reverse at any point. Remember, there's a kind of confusion, there's a kind of equilibrium. Equilibrium means buyers can get in and it takes maybe 2 hours. After that, you see sellers get in again and you see changes the direction, just like that. So if you are getting in where you spot a kind of equilibrium, you are getting in, you need to be very, very careful. There are some kind of these dojis that I will not even recommend you to trade it if you spot it on the higher time frame. And that is why you must not trade all the time. When you spot a move and it is confusing, do not trade. Wait for that move. Now, this is a good example. If you look at this move here, at this point, look at this point, there was a kind of funny move here. So if you trade within this point, and this thing took about more than 1 week here, this is a 1 day candle. So you have 1, 2, 3, there were more than 10 candles here. So this thing took more than 1 week actually to be consolidating within this point. So if you go to the lower time frame, maybe the 4 hours, you actually see a ranging market. This will actually bounce between support and resistance, just based on this. Now, what you need to do is you draw this, I wait for the break. Where you see this break, that is a perfect move. I get in and it goes up. Now, some people actually get in at this point and they place that trade and they sit for 1 week. If you get in at this point, you are not careful, you lost money, because there's a kind of confusion here. That is why you don't trade all the time. When you spot this kind of move, especially on the normal currency or the light pairs, then I advise you to stay out of the market if you cannot trade it. Because if you trade it anyhow, trust me, you will not be able to do it. Now, if you look at multiple time frame analysis, this thing actually is a reversal candle. After that, it shows clearly that this thing has to sell. So you should be looking for sell opportunity. But at this point, what is the trigger here? There is no trigger. So you can buy at this point, I see it selling down to this point. You can sell at this point, I see it buying up to this point, because it is a kind of confusion. So that is it. And all this confusion, they are indicated by this kind of dojis. If you look the same on this chart, you actually see this is a doji. This is a kind of confusion doji. Look at this one too. This is a kind of confusion doji. So that is why we had the kind of confusion within this point. The same thing for this one. So you need to spot this thing out. Even this one, look at this move. You need to spot them out clearly before actually trade. So that is it for this doji. We'll do just this one today. Then tomorrow we'll continue the other one. We have more than 50. But as I said, I've already sent you that book, Candlestick Bible. You read the book now. So start reading the Candlestick Bible. Tomorrow we'll do that. I will not do all the 50 reversal candles. We'll do those strong reversal candles that I told you about. We'll take time and explain them one after another. We may do just maybe 10. If you want to know more, then you can read the book and get more. So that is it. That is it. Is there any question?
Okay, so thank you. Thank you for today. Hi.
Okay,
this thing is old school. When I was getting in, I didn't know it was like that.
That is it. For us, it's not a one-day issue. It's not a one-day. It's not a one-week issue. I'm getting you. I'm saying that for us, it's not a one-day issue, and that is why when I talk about the fee, so many people you are seeing, you can actually spot, you can see why we always insist on the fee, because it's not a one-day issue. It's not a one-week issue, and we have not even gone midway. We actually have to take time. The issue is the way I teach. If you get on, if you meet some people, actually they can take 1 week and they teach you everything. But when they teach you everything, they will teach you indicators. I will not help you. But I prefer, and from what I know, this thing that I'm teaching you, if you master your chart, this is the best trading style that you ever have. So that's why it's a little bit take your time and you do it. So I've recorded this video. I've recorded this class. I'll upload the link. I don't know. I'll just create a Telegram group. Then I add the two of you and I send, or I'll send the link. Then you guys join and I add. But please, this is my privacy. Do not share it with anybody. Please, if I discover that you share it with anybody, then you risk being out of the class. Because this is my privacy. I don't always do this, but it's because you recommended it last time. I just thought of doing a recording and sharing. So that is it. If there's no other question, then I think we can end the class of today. Okay, there's silence, so we can end the class of today. We'll meet tomorrow again, same time.
Okay, thank you, sir. Have a nice day. Thank you.